Folks, I got an email that I thought would be of general interest to a lot of you out there. It was from Fred, and he says, here is a stump the financial guy question. When the U.S. dollar is no longer the world's reserve currency, he starts out, and let me just stop for a second and say, why is the U.S. dollar the world's reserve currency? Well, according to Robert Kessler, who was on CNBC a couple of weeks ago, he was talking about that it is the reserve currency because our balance sheet is so much better than literally any other country out there. If you look at the income and the household debt and the corporate debt and the business debt versus our assets as a nation, it far dwarfs anybody else out there. Now, if you have a currency change, is that a big deal? Well, if you look at what happened in Europe, you've got the euro. That was not the currency in Europe. Back 20, 30 years ago. It is now a currency that is used in Europe. So it's not really that big of a deal when you have a change in currency, I would submit. And the Treasury can no longer print their way out of unpaid debts, he continues. Well, like Warren Buffett said, we're probably going to get out of the debt the way we always have, which is the devaluation of the dollar is a paraphrase of what he said. And literally what happens is we inflate our way out of debt normally, and it's a gradual process. And as I've always said, fixed income investments are long-term a losing proposition because of that inflation. And that's what the debt is. It is fixed income investments where people have lent money, both individuals and countries, to the United States. How is my position in the value of our assets protected, was his question. That's the rest of that line. Well, by basically going and diversifying across lots of different asset categories all around the world. That's how you protect it. Owning stocks and bonds and different types of stocks in different types of countries and so on and so forth. More about that in a second. I'm really concerned having seen non-photoshopped pictures of signs that read "dollars not accepted." Well, if you're dealing in a country other than the United States, you're going to find signs that say that they want their currency. Just as if you walk in a Cracker Barrel and have breakfast, they don't want to get euros. They want to get paid in dollars. It's nothing unusual, nothing to be frightened about. As a matter of fact, if you go into different places around the world, it would be a pain in the neck to go and convert the currency all the time. So it's not a real big deal that they don't accept dollars in different areas around the world. There are, of course, other more ominous events taking place. I asked several years ago about the continued strength of the U.S. currency, and I am back. Hey, you know what? The weakening of the U.S. currency actually helped us out significantly with our international investments. They went up significantly in value. As a result, they also help our export activity as a nation. Next line. Since it has never happened before, quote unquote, is the response I get from other contacts. I want to ask you again with more evidence on the table. And I've given a bunch of that. But to continue on, he says, it never happened to GM and to many others, but it concerns me and I do not have the knowledge you possess. Now, GM, you're talking about an individual company. And so I've always said individual companies come and go. Yes, absolutely. Companies can go bankrupt because they go into situations that they've never been in before. But in a diversified portfolio like we use, we'll have 14,000 companies. And if some go by the wayside, even some nations go by the wayside, then we have other nations that will benefit because all of a sudden there'll be demand that has opened up. A certain nation produces a good. All of a sudden they run into a problem, and other nations, and you happen to own stocks in those nations, they will pick up for the lack of the lack of supply being supplied by that particular country or companies, if we're just talking about companies. It says, does the model your group follows not predict the future, take into account Plan B strategies? Well, the Plan B strategy is owning 14,000 companies to 15,000 companies in somewhere in the neighborhood of 45 countries all around the world. Because you're right, I don't know what's going to happen and nobody else does. The stock market and pricing in the stock market and bond markets are based on all knowable and predictable information. People's pessimism and their optimism is both built into stock prices. So what happens is that pricing is based on the sum total of the beliefs and the expectations of people all around the world, and making sure that you diversify across as many of these areas as you can is a plan B in my mind. And no, Glenn Beck did not ask me to write to you, LOL. And I may remind you that the Hindenburg omen, which Glenn Beck said was an absolute it was 80, I think it was 75, 80% sure to predict a market downturn, a huge market downturn last year. It was almost a certainty when he said that that was going to happen, and I pointed out that it was data mining and it was a lot of hogwash. And guess what? He ended up being wrong. I don't think he's issued an apology. I don't know for sure, though, so I'm not going to say. But anyway, he says, I do think that he brings a lot of information to the table. Well, I would say that a lot of that information is not very useful in the investing world, as I just pointed out. Long video, but I hope that helped, and we'll catch you next time, folks.